Well, let's get across the market open. David Lane joining us from Audminet. David, welcome to Wednesday. Let's start stateside because the focus very much on what we're seeing with that looming US government shutdown. How's that playing out at the moment?
Yeah, it's certainly interesting, Andrew, that probably by around 2 o'clock our time this afternoon, if there's no last minute deal, which it doesn't look like it will happen, we'll see a US government shutdown. So first one that we've seen since 2018 and the first full government shutdown since 2013. You would think that that would be a bit of cause for concern for markets. However, we actually saw the US markets close at another all-time high last night. So the Dow Jones, S&P 500 and Nasdaq all slightly stronger and actually finished a really, really strong September quarter. So the S&P 500 and Nasdaq had the best September quarter they've had 15 years. So markets just seem to be not concerned about the US government shutdown.
Yeah, also defying that seasonality, of course, too, but that momentum just continuing. So I guess you don't want to be standing in front of that, do you?
Not at the moment, no. But we remain concerned about the level of the US market and the fact that they are quite overvalued. And also in Australia, we've had a little bit of weakness over the recent weeks, but yeah, we're still fairly high as far as overall valuations are concerned as well. Interestingly, though, what we've seen here is quite a bit of a shift in terms of portfolio makeup. So a lot of selling in the large caps that have been overvalued and picking up small caps. So we're starting to see that small and mid cap side of the market really taking off.
Well, certainly commodity space has been hot. We're going to have to look at precious metals, of course. Now, I'm speaking of which, gold getting another bid, another record, clearly on geopolitical risk, but also because of that shutdown.
Yes, that's exactly right, Andrew. I think, gold has been a standout this year, up over 42% so far this calendar year and continues to be well bid, as you said. Not only in the spot market, but also in the futures. The December futures is sitting at 3,887. So, a lot of expectation that not only it is at record highs, but it should continue further. And it really is that uncertainty factor, investors heading towards gold. And interestingly, our gold analyst has just been over in the US for the last week and has returned probably even more positive about the outlook for gold and for his stocks that he covers in the sector. So, still a lot of positivity towards gold.
Well, interested to get Ord's view on those stocks that you're liking at the moment. What are some of those names you're looking at?
Yeah, so Paul Kane has released a report called All That Glitters Is Gold and has really upgraded the outlook for the gold price and individually the stocks. So our key pick in the sector is Ramelius. He's got a buy recommendation on it. Also on Vault Minerals, they're probably the two that we like, as well as Westgold Resources at that smaller end. We do have an analyst conviction list, and he's just switched out Vault because it's really rallied very, very strongly. Put in Ramelius as his preferred pick, but still likes, all three of those companies, Ramelius, Vault and Westgold.
So you think you're happy to chase it at this point? What did you come up with a target price there for gold?
Well, in terms of the longer term outlook, I think it's over $4,000 an ounce that he's looking at. But the other thing, as far as the companies are concerned, is that he's also been looking at the margin expansion. One of the things that we've found with the gold price going up as much as it has is that the costs haven't really increased align with the gold price, so that the margin expansion for the gold companies has been really quite strong, and the companies that he's been looking at have really got strong asset quality as well. So in terms of the target prices on individual stocks, Ramelius is upgraded the target price to $4.30. They're currently trading at $3.88. On Volt, target price of 80 cents from 66 where they're trading at the moment. And Westgold has got a target price of $6, so they're currently trading at $4.48. So, still sees some further upside. And the other interesting thing as far as flows are concerned is that we've actually seen a flow out of a lot of the passive gold ETFs, but haven't necessarily seen that money flowing back into gold stocks. So, he thinks that there's still quite a few tailwinds that should push the prices of those gold stocks higher.
Now, meanwhile, of course, David, we did have the RBA decision yesterday, leaving rates on hold as expected. What did you make of what you heard?
Yeah, it was not unexpected that they kept rates on hold. Interestingly, though, in the commentary, I think a lot of the commentary was around the fact that we are actually starting to see a very strong economy in Australia. So the employment market is still, very robust, at close to full employment. And they commented about the fact that demand in the private sector is recovering, inflation's persistent, and the labour market is stable. So indications there from the RBA that they were unanimous in keeping the rates on hold. And I think the market's starting to change its view that there were a number of economists that expected a rate cut potentially in November. That was prior to yesterday at about a 50-50 chance. Now that seems to be reduced to about a 33% chance. So most economists are now talking about no more rate cuts this year and potentially in May next year. Obviously, looking at how inflation feeds through, because the RBA also indicated that they think that the third quarter quarterly CPI could well be higher than expected. So, they sort of were a little bit spooked by that last monthly number and concerned about inflation being at the top end of their range.